Hi, it's Anna from CoIndicator. Make sure to subscribe for more economy and cryptocurrency, okay? Welcome to CoIndicator. Let's start with Apple stock price. Could it be skyrocketing to $254 per share? Apple stock could soar 37% to a $4 trillion market valuation by the end of 2024, after confirming a key breakout to all-time highs. Apple stock decisively confirmed its breakout to new record highs on Friday, and that could pave the way for more upside into 2024, according to a Friday note from Fairlead Strategies. The firm highlighted that with Apple stock trading at $187 Friday afternoon, the stock is poised to close above its prior resistance level of $183 for the second week in a row, confirming a decisive breakout. This bullish long-term development generates a new price objective of $254 per share for Apple, representing potential upside of 37% from current levels. A rise to that level would give the iPhone maker a market valuation of about $4 trillion based on today's current shares outstanding of $15.79 billion. The breakout yields a measured move objective of about $254 using the COVID 2020 corrective low as a point of reference. Fairlead Strategies founder Katie Stockton told Insider on Friday, "The measured move assumes that the uptrend that preceded the 2021 to 2022 trading range has resumed." Stockton identified the end of 2024 as the timeframe for the technical price objective to be reached and noted that the stock's uptrend looks poised to continue in the short term. The uptrend shows no counter-trend signals yet. When a pullback develops, initial support is at the rising 20-day moving average, although a pullback does not appear imminent, she said. The 20-day moving average for Apple stock is currently around $181 per share. Apple stock has surged 44% so far in 2023 and has driven the bulk of the S&P 500's year-to-date gain of about 14%. The company recently announced its first product in the AR/VR market, the Apple Vision headset, which will sell for $3,499 when it is released early next year. Apple's current valuation is about $2.96 trillion, and it's set to cross the $3 trillion threshold if the stock price hits $190.73, which is just over $3 away from current levels. That's for Apple. Let's move to a disturbing trend for real estate investors, which is homes sold at a loss. The glory days of real estate investors buying and flipping homes for quick profits seem to have hit a roadblock. It appears that investors are now losing on approximately 1 out of every 7 homes they sell. In certain U.S. cities, sky-high house prices and elevated mortgage rates have diminished homebuyer demand, forcing investors to sell homes at a loss. A recent report by Redfin reveals that in March, investors lost money on roughly 13.5% of the homes they sold, while only 4.8% of overall U.S. homes sold at a loss. This comes after a dire month in February, where real estate investors experienced losses on 14.5% of homes sold, the highest rate since 2016 and a far cry from the record monthly low of 2.8% in May 2022. The first quarter of 2023 saw real estate investors purchasing 48.6% fewer homes compared to the previous year, as elevated interest rates, declining rents, and housing values ate into potential profits. The decline marks the largest annual drop on record, outpacing the 40.7% decrease in overall home purchases in the major metros Redfin tracks. Profitability has been hampered by high mortgage rates, which have increased the monthly payment burden for typical homebuyers. Consequently, the slowdown in home buying demand has led to reduced sale prices, resulting in a higher share of investor-owned homes being sold at a loss. At the time of the report, the hardest-hit market was Phoenix, where just over 30% of homes sold by investors incurred losses. Following closely were Las Vegas, 28%, Jacksonville, Florida, 20.9%, Sacramento, California, 20.2%, and Charlotte, North Carolina, 17.4%. Van Welburn, a Redfin agent in Phoenix, shared an example. "I recently showed one of my buyers a 3-bedroom single-family home in Glendale that was listed by an investor. My client ultimately found another house they liked better, and the investor ended up losing about $20,000. The investor bought the home for $450,000 and sold it for $480,000, but put $50,000 of work into it. The house also sold below the $550,000 list price after sitting on the market for almost 4 months. On the flip side, investors are less likely to face losses in affordable areas where housing prices did not experience such drastic increases during the pandemic. Certain South Florida markets have shown more resilience. For instance, in March, only 1.7% of homes sold by investors in Virginia Beach, Virginia, resulted in losses, a significant difference compared to Phoenix. Following Virginia Beach were West Palm Beach, Florida, 2.4%, Miami, 2.5%, Fort Lauderdale, Florida, 2.5%, and Warren, Michigan, 2.6%. So, real estate investors, please be careful. Lastly, we'll discuss about more workers plan to retire on less money by claiming Social Security early. Hammered by inflation, recession fears, and doubts about the future of Social Security, an increasing number of working Americans say they plan to claim their Social Security benefits early while staying on the job. Here are the factors driving this trend and the pros and cons of following suit. Consider working with a financial advisor to create a retirement plan that fits your goals, risk profile, and timeline. 42% of Americans said they plan to file for Social Security before their full retirement age while also continuing to work, according to a 2022 survey by the Nationwide Retirement Institute, up from 36% in 2021. Workers who've paid into the retirement system can claim their Social Security benefits as early as age 62, but that decision can result in a monthly benefit check that's as much as 30% less than the payment they'd receive at full retirement age, which is between ages 66 and 67, depending on what year you were born. By waiting beyond longer to file, a retiree can increase their Social Security payment by 8% each year beyond the full retirement age they wait to file, topping out at 70 years. As of February 2023, the average monthly Social Security check among all retirees is $1,693.88, according to the agency. Meanwhile, the average check for a 62-year-old retiring this year would be $1,247.40, while the average payment at the full retirement age of 67 would be $1,782. Over a 20-year retirement, the monthly difference of $534.60 would add up to more than $128,000 in retirement income, not counting any cost of living increases. These adjustments increase benefits by a set percentage calculated each year to keep retirement income paced with inflation. Collecting benefits early isn't always wrong, planners note. Many workers start taking Social Security benefits when they're forced to retire because of corporate downsizing, age discrimination in hiring, illness, or the need to care for a sick family member or anything else. And that's it. So, what do you think about today's updates? Catch another news tomorrow before bedtime, okay? See ya.